Welcome to our Hong Kong Brief program. In today's roundup, we're diving into some intriguing news from around the globe, starting with the UK's housing dilemma. Apparently, homes in England are giving buyers the least bang for their buck compared to other developed countries. With properties older than a bowl of grandma's secret recipe and less room to swing a cat in than you'd find in New York City, it's no wonder Brits are feeling the squeeze. Meanwhile, over in the financial world, Hong Kong's stock market is tiptoeing into a week crammed with earnings reports, with investors holding their breath and their wallets tight. But it's not all doom and gloom. Hong Kong's very own Wang On Properties is gearing up for what could be their busiest year yet, betting big on the local market's rebound. They're even turning a hotel into the city's largest student digs. And while we're on the topic of recovery, the Peninsula's CEO is on a mission to spruce up the luxury hotel scene, hoping to dust off the cobwebs of negative perceptions. In other news, China's giving the cold shoulder to Intel and AMD chips in government computers, and there was a bit of an oopsie at a Hong Kong triathlon event with the national anthem mix-up. But hey, who hasn't pressed the wrong button once or twice? So, whether it's the housing market blues, cautious stock trading, or ambitious property developers making moves, there's never a dull moment in the world of news. Please stay tuned for the detailed content on these stories and more. Expensive, cramped, and aging, UK homes lag behind most of developed world. South China Morning Post. A new analysis by the Resolution Foundation has found that homes in England offer the worst value for money in the developed world. The analysis showed that the UK has the oldest properties in Europe and English homes have less floor space than many international peers, including Germany, France, and Japan. London homes were found to be even more cramped than those in New York City, with an average of 38 square meters per person. The findings highlight the scale of the housing crisis in Britain, with housing costs in the UK being more expensive relative to general prices than in any other OECD country. Hong Kong stocks open earnings-packed week on a cautious note. South China Morning Post. Investors in Hong Kong are showing caution as stocks trade in narrow ranges ahead of earnings announcements from a third of the companies on the 82-member benchmark. The Hang Seng Index increased by less than 0.1% to 16,503.12, while the Hang Seng Tech Index and the Shanghai Composite Index both retreated by 0.2%. Meituan, China's largest on-demand delivery firm, rose by almost 8% to 95 Hong Kong dollars and 20 cents after reporting a turnaround in its Q4 earnings. Aluminium producer China Hongqiao gained 8.5% to 8 Hong Kong dollars and 2 cents after reporting a 32% YOY increase in FY 2023 profit. Wang On set for busiest year as developer seizes Hong Kong market rebound, CEO. South China Morning Post. Hong Kong developer Wang On Properties is looking to increase its investment in new projects as it anticipates an upturn in the local market. The company plans to convert a hotel property into the city's largest student accommodation facility to meet demand. CEO Nick Tang Ho Hong said that 2024 will be the year the company launches the most new projects since its listing 8 years ago. Tang expects home prices to rise by 5% this year and the rental market to increase by 8% as demand strengthens. The peninsula sees recovery for luxury hotels as CEO fixes negative perception. South China Morning Post. Hong Kong's hospitality sector is expected to face continued challenges as tourist arrivals struggle to return to pre-pandemic levels, according to Hong Kong and Shanghai hotels. The company, which owns the Peninsula Hotels, says that international travelers from the US and Europe to Hong Kong and mainland China remain low due to negative perceptions and issues such as trade wars and geopolitical conflicts. The city's hotel industry enjoyed some recovery last year as COVID-19 travel restrictions eased, but occupancy rates are still below levels seen before the social unrest in 2019. Yuan rebounds as PBOC sends strong message of support via fixing. Bloomberg. China's central bank has given a clear signal that it will not let the yuan weaken further by setting a stronger than expected daily reference rate on Monday. The move follows concerns of a devaluation of the currency after last week's fixing suggested officials were open to depreciation. Analysts believe that the People's Bank of China's signal is aimed at correcting the perception that it wants to weaken the yuan and suggests that efforts to maintain stability this year will continue. BYD takes on EV laggards Toyota, VW with steep China price cuts. Bloomberg. Chinese automaker BYD is discounting every electric and hybrid car model it sells in a bid to win customers from Toyota and Volkswagen. The price reductions are part of a marketing campaign that claims electricity is cheaper than oil. The company has cut prices on more than 100 existing models in addition to relaunching 70 models with lower prices. BYD's strategy is to win over drivers in rural areas and smaller cities who previously could not afford an EV. China blocks use of Intel and AMD chips in government computers. Nikkei Asia. China has introduced new guidelines that will mean U.S. microprocessors from Intel and AMD are phased out of government PCs and servers, as Beijing ramps up a campaign to replace foreign technology with homegrown solutions. Hong Kong officials sorry for national anthem blunder at triathlon event. South China Morning Post. Organizers of the Triathlon World Cup in Hong Kong have apologized after playing the wrong national anthem during the women's medal ceremony. British winner Sion Rainsley was waiting to hear God Save the King when the Spanish national anthem, Marca Real, played. The anthem continued for 40 seconds before the correct one was played. The Triathlon Association of Hong Kong has promised an internal review to prevent similar incidents from happening in the future. Rainsley won her first World Cup race in Hong Kong, overcoming American competitors Katie Zaffirs and Kirsten Casper. Hong Kong's family office hub drive augurs well for private banking, Citigroup. South China Morning Post. China's ultra-rich are turning to Hong Kong as a wealth management and family office hub for Asia, offering significant private banking opportunities, according to executives at Citigroup. The bank estimates that $100 trillion of wealth creation will take place across the world over the next 10 years, with the highest rate of growth in Asia. Hong Kong has the opportunity to showcase the importance of not only being an investment center, but also a place for family offices to seek advice. An estimated $2.5 trillion in intergenerational wealth is expected to have changed hands across Asia by 2030. Hong Kong pair still in Olympics race despite World Triathlon Cup struggles. South China Morning Post. Hong Kong triathletes Jason Ng Tai Long and Bailey Brown are still in contention for the Olympics despite disappointing performances at the World Triathlon Cup. Brown finished 40th in the elite women's race after struggling with the swim start, while Ng suffered a flat tire in the men's event. Brown hopes to improve her swim start speed to be more competitive, while Ng aims to avoid further flat tires. Their rivals from Kazakhstan, Ayan Bizenbaev and Ekaterina Shabalina, failed to distance themselves from the Hong Kong duo, leaving them both with a chance to secure a spot at the Olympics. Forget Instagram spots. What's Hong Kong doing to nurture the next Jin Yong? SCMP opinion. An exhibition in Hong Kong is displaying 32 sculptures of iconic characters from martial arts fantasy novels to celebrate the 100th anniversary of the author's birth. The sculptures, created by artist Ren Zhe, are on display in 2 locations in the city and have generated a lot of interest among residents and fans of the author. The novels by Louis Cha Leung Young, known as Jin Yong, have been adapted into television series, films, and video games and are well known throughout the Chinese diaspora. Top China scholar says U.S. tensions will be with us for a long time. South China Morning Post. Li Chung, political scientist and founding director of the University of Hong Kong Center on Contemporary China and the World, recently gave an interview discussing U.S.-China relations, Taiwan, Hong Kong, and Chinese politics. He believes that U.S.-China relations have deteriorated since 2017, with the U.S. increasingly viewing China as a major threat. Lee argues that the structural problem lies in China's comprehensive challenge to the U.S. in terms of its economic, military, science and technology, and ideological power. He also suggests that the rise of China's middle class has created a structural problem, as many Americans feel that China's progress has come at the expense of the U.S. working class. Lee believes that the risk of conflict is highest in the South China Sea, but acknowledges that there is a lot of uncertainty, especially with regards to the U.S. elections and the possibility of Trump being re-elected. He argues that China's approach to global conflicts, such as the conflicts in the Middle East and Europe, has been focused on portraying itself as a constructive force for stability and peace. However, this narrative is viewed cynically by Western countries, while countries in the global South see China as playing an important role. Regarding Chinese politics, Li suggests that the recent removal of ministers Qin Gang and Li Shangfu does not reflect negatively on President Xi Jinping's leadership. He believes that Xi's decision to remove them was decisive and reduced any potential damage. Finally, Li argues that Hong Kong still has many strengths, such as its cosmopolitan nature, its status as a major financial center, and its strong universities. He believes that Hong Kong will rebound from its recent economic and political difficulties. Once high-flying bankers in Hong Kong become a lost generation. Bloomberg. The U.S.-China geopolitical tensions and President Xi Jinping's push for data security and financial market regulation have fractured capital markets and caused a decline in Hong Kong's role as an international financial center. The number of finance professionals looking for jobs in Hong Kong is increasing, with many struggling to find work. The number of people licensed with the Hong Kong Securities and Futures Commission has dropped, and IPO fundraising in Hong Kong fell by 56% last year. Private equity and venture capital investors have also been affected. The slowdown in financial services activity is likely to weigh on Hong Kong's economy, which accounted for about 23% of gross domestic product in 2022. Bankers should prepare for a minimum 20% drop in compensation, and some may experience extreme reductions. Some bankers are making lifestyle adjustments, trimming expenses, and re-evaluating their self-worth. However, not everyone believes that Hong Kong's best days are over, and the government has introduced a talent pass to attract more people to the city. Japan stocks could grow more volatile with end of BOJ ETF purchases. Nikkei Asia. The Bank of Japan, BOJ, has ended its unconventional purchases of exchange-traded funds, ETFs, as part of its shift away from aggressive monetary easing. The BOJ has spent roughly 70 trillion Japanese yen, $462 billion, on ETFs over 14 years. While the absence of BOJ support has not impacted the equity market so far, analysts expect a greater effect on the market when the bull market ends and if the central bank starts unloading its ETF assets. The BOJ has indicated that it is in no hurry to sell its ETF holdings, and has said that the ETFs have provided positive returns, so it will hold on to them as long as it continues to receive good dividends from Japanese equities. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.